Welcome to the Holistic Wealth and Health Podcast. Your co-hosts, Jason Smith and Bryan Bibbo, will inspire and teach you how to prosper in your mind, body, and spirit, not just your financial life. Joining forces with field experts, Jason and Bryan are here to help you focus on what matters most in your life, living well.
Hello, everyone, and welcome back to the next episode of J.L. Smith Holistic Wealth and Health Podcast. I'm excited to have the guest on today. I've heard him speak, giving great speeches on the topic, maximizing Social Security for your long-term wealth. So I would like to introduce Ahluwalia, is the head Social Security planning at OneTeam Financial. With 30 years of experience helping retirees maximize their benefits, Ash has helped clients develop customized claiming strategies as part of their holistic wealth management plans. He holds credentials including CPA, CFP, and an MBA from Wharton. Ash is a frequent speaker and has been published in many industry publications. Ash, very excited to have you on here today.
Thanks, Bryan. Pleasure to be here.
So the first question I want to start off with is Social Security. Why in the world would anyone want to dive this deep into Social Security? What attracted you into Social Security and knowing the ins and outs?
You know what? It wasn't sort of by choice. It was out of necessity. As we're, our clients are people approaching retirement. Social Security kept coming up. And I started calling all the smart CPAs I know, smart tax attorneys, even other financial planners to see what they knew about Social Security. And I realized they didn't know anything either. I mean, other than the basics. And I thought, how is this possible, right? It's such a ubiquitous benefit. Everybody has it, but there don't seem to be any experts in it. So I thought, you know what? I'll become an expert. I can take a weekend and learn it. Well, good luck with that. There's over 2,700 rules governing Social Security. And most couples have over 500 possible filing scenarios. And they basically know one, maybe two. They know when they stop work, they can go to Social Security to get a benefit, or they may know if they delay the start of their benefits, they'll get a higher benefit amount. So I saw this as a planning opportunity to really go deep for our clients, do some customized analysis, and be a resource to the CPA and attorney network that we have. So when they got questions on Social Security, they could reach out to us.
Yeah, it sounds like a genius move. They say there's riches in niches. So you really found that niche you were looking for. And that weekend that you thought it would take to study up on, you're probably still coming up with these laws, right?
It's a long weekend, yeah.
So when you talk about Social Security here, there's a vast claim ages all the way from 62 to 70. And I know everyone is different, but let's start at that 62 age, right? The people that maybe are approaching retirement or already in retirement at 62, what we understand is they're locking in more than likely a reduced benefit for their foreseeable future. Can you explain a little bit about that? What does that entail? If I'm still working, should I claim at 62?
Yeah, so you can file for a Social Security retirement benefit as early as 62 or as late as 70. If you took it at 62 versus, say, your full retirement age, it'll be 30 to 35% less than if you took it at full retirement age. If you delay to 70, you get your max benefit. And kind of rule of thumb, your benefit at 70 is about double what it would have been at 62. So again, why would somebody race in at 62 to take it early? And lock in a permanently reduced benefit? Well, there are, a number of reasons for that. Right now, especially with so much change going on in government programs, some people are panicking that Social Security is going to run out of money, or they're going to change the rules. They're not going to get their benefits, and they want to get something. But I'm not a proponent of that philosophy. I think Social Security is going to be around. Over 72 million Americans get a check from Social Security, and 20% of them have no other income. So I find that for the most part, the people that used to take it earlier, ones that really needed the money, now there's a little more panic to take it. But quite frankly, a lot of people are working longer than they were years, they were planning to. And so if your earnings are above $23,400, every $2 you're in above that, they take back $1 Social Security if you file between 62 and full retirement age. So from a lot of people, they don't even actually have an option. They can't even file, because they're going to get a reduced benefit or an eliminated benefit. But I am seeing more and more even on the internet, like, oh, you should definitely take it at 62. And I'll share one story with you, Brian. I saw this one guy said you should always take it at 62. So, that's not right. Always and never are never right,
Right.
But he said, well, if you're 62, your life expectancy is 75, you should take it because you'll never get it'll never make up for it if you delay it. And I was like, well, first of all, that's not right. If you make it to 62, your life expectancy is beyond 7. Like if you're 76, is your life expectancy 75? No, I don't think so.
Right. Doesn't work that way.
It doesn't work that way. So, there's a lot of reasons to take it early, but if you crunch the numbers, you want to look at what's the best filing strategy for you in your particular situation, because it may make sense depending on your situation. But for the most part, I'm finding that taking it really early or delaying to 70 aren't really the best options. There's always somewhere in the middle that ends up being a more optimal strategy.
No, that's great. And you brought up 2 points that I just want to dive a little bit deeper on. You talked about from like age 62 to full retirement age. If you're over a limit and you're working, you owe some money back to Social Security. Can you dive a little bit deeper? Because Ash, I run into this all the time and people come to us say, can you fix this for me? Well, sometimes it's too late to be able to fix that problem of that earned income limit.
Yeah, and that's an important point. From 62 to full retirement age, there's an earnings limit. If you make more than $23,400 and you file for Social Security, every $2 you're in above that, they take back $1. So if you're in $33,400, you're over by $10,000. Social Security is going to withhold the first $5,000 of your Social Security benefits. But you use the right word. It's earned income. So it's not income from pensions, investment income. It's W-2, 1099 income that they're looking at for that earnings test. Once you reach your full retirement age, though, there's no earnings limit. You can make as much as you want and collect Social Security without a penalty. But if you try to take it early, you got to navigate that earnings test. And just to put a little more clarity on it, for a couple, it's earnings for each individual spouse. So one spouse has a high income, maybe they can't collect anything, but the spouse with the lower income might be able to. So they pay taxes on it if they're filing jointly. They pay together. But for the earnings test, it's based on their individual earnings.
Yeah, and that's, I think, one of the biggest miscommunications out there when it comes to Social Security. And I joked before, but I can't tell you, I've had countless people come in that I'm meeting for the first time and says, I got this letter from Social Security. I owe them $5,000 or $10,000. Why would I owe them this money? And guess what? They made $50,000, $60,000, $70,000, $80,000 from a W-2 job and tried pulling Social Security early. So I think the major takeaway, Ash, for our audience is there is a earnings limit if you're going to work or you're self-employed, earned income, to your point, from 62 to full retirement age, you could run into a penalty situation. Yeah, the next thing I want to elaborate on is something you said that's so profound, and I want to kind of go into it a little bit more. Is people always bring up, well, the government's not going to be able to pay out Social Security, and right now we're paying out over $1 trillion in Social Security benefits annually, and we're only bringing in $800 billion worth of people paying into the system, and the trust fund is getting close to exhausted. And I just want to hear what you say to the audience, because what I always say, Ash, is, we've been here before. In history, the trust fund was in a very similar situation. If we look back at Social Security from some years back, decades ago, and we changed the full retirement age, we changed how Social Security was taxed. Those were some of the changes along the way. So share with me, you're really adamant about saying is you're under the thought process of not believing that Social Security is going to go bankrupt or something like that.
So when you hear that Social Security is going to run out of money in the press, what they're really talking about is the Social Security Trust Fund. So there's like $3 trillion in the trust fund right now, but it's projected to go to zero in 2034. Now, if that happens, your Social Security check doesn't go away. It'll drop to about 80% of what you were collecting, because the majority of the money funding Social Security comes from tax receipts, not from the trust fund. But as you alluded to, there are a number of levers they can pull to fix Social Security. They can push that full retirement age out further from 67 to 68 to 69. They can increase the taxation on Social Security. The taxable wage base is $168,600, but hey, Medicare, you paid on all your income, right? So they could raise that wage base. They could increase the tax rate on Social Security. They could put a cap on the cost of living increases or eliminate it. I mean, they have a lot of levers they can pull. So I tell people, for the most part, Social Security is their only pension. They have IRAs and 401ks, but they don't have pensions anymore, right? But they have Social Security, which is a pension. And the risk in retirement is not dying young and not getting your money. It's living too long and outliving your money. So making a smart decision about your Social Security pension is critical, because that's an income stream you can't outlive, and it's foundational to your income stream in retirement.
Yeah, that's great feedback. Now, one thing that we run into is Social Security being such kind of a misunderstood asset. People always go, here's my 401k statements, here's my IRAs, here's my investment accounts. But when they actually look at that Social Security statement, and I love saying, hey, have you ever looked at that number that says, here's what you've paid in over your lifetime, here's what your employer's paid over a lifetime, and it amounts to $200, $300, $400, $500,000 sometimes, right? That we see people have paid into it. So what do you educate people on? Like, what are we telling the families, and how do they approach Social Security and how it fits in their financial plans?
Yeah. So when you're approaching retirement, right, you got to roll up your sleeves and do some homework. You got to figure out, well, what's going to be your expenses in retirement? What's that number that we got to cover? And then you have to look at all your different buckets of money to cover that need, adjusted for inflation, of course. So Social Security is one of the rare pensions that have cost of living increases. So the way I look at Social Security is find that optimal filing strategy for you, and then supplement the income you need from your other buckets of money. So as far as like when you're going to take it, there's no cookie cutter answer, right? Everybody's circumstance is different. They've got different life expectancy assumptions. They plan to work for different periods of time. Their incomes might be different. Their ages differences might be there. It may be a second marriage. They may have minor children. They may have former deceased spouses. I mean, there are so many complexities to Social Security. You do want to put it under a microscope and find out what all your eligible benefits are. But the magic comes in integrating it into an overall plan, right? You have to look at, do your clients have life insurance? Because if they have life insurance, maybe you don't need to maximize that Social Security survivor benefit. But if they don't, maybe you do. Do they have long-term care insurance, right? One of the leading causes of bankruptcy in retirement now is a long-term care event, especially for women. And so maybe using some of your Social Security to finance long-term care insurance will help protect your overall plan. So yes, you got to look at all your Social Security benefits, but you have to see, well, how does it fit into this person or this couple's situation, and how do you optimize that?
Yeah. So a lot of, Ash, what we're hearing you say here is we got to look at the bigger picture. You brought up an example of like life insurance. Can that be used as an asset upon someone's passing, where we don't need to maximize Social Security? And that could sway the numbers. Hey, I'm going to pull at 63 or 64, or maybe I'm going to wait to 68 or 69, right? Some of these other assets that we have out there play into the bigger picture. I always say is, don't have a silo mentality. Anyone can run a math formula in Excel or some sort of program on, hey, here's the best way to optimize Social Security, but you're looking at it in a silo, and we're really not looking at the bigger picture of things. So it's important, to your point, is combining all this stuff together kind of in one plan to make sure, hey, Social Security interacts with the taxes. Taxes are a big aspect to it too that we didn't even mention, but all of the other financial resources that we've accumulated over our lives play into the picture.
Absolutely. And since you brought up taxes, as you know, not all assets are taxed the same, right? Not all income is taxed the same. And Social Security is a unique tax. It's provisional income. They look at your adjusted gross income, half your Social Security, any muni bond interest, and then it fits into a table. If it's more than $44,000 for a couple, you're going to have to include 85% of your federal taxes, but 15% is exempt. The vast majority of states don't tax Social Security. It's not like taking a distribution from a traditional IRA where it's all subject to federal and state income tax. So there's another layer of complexity, right? When we're building retirement income plans, we got to look to strategies to get the highest after-tax income. And so how does Social Security, fit into that? So, it's a beast all on its own, but then when you integrate it into an overall plan, right, now you've really got to look at all kinds of different angles.
So, Ash, you bring up some good points about taxes. And one of the things, the misconception I'm seeing out there is with the big, beautiful bill that has recently passed. And we were supposed to have no tax on Social Security, right? And people are still believing it. You're still seeing news sources reference that. Social Security actually put something out to all the Social Security recipients recently via email, and it was very convoluted and it was hard to understand of like what they were saying. But the main thing is Social Security on a federal level is still taxed. All they did, if you're over 65 under certain income thresholds, add an extra $6,000 per person for the standard deduction. And if that's something that's in your situation, don't hesitate to reach out to us. But I just want to be certain that people don't think that Social Security, hey, I don't know tax on Social Security. I can't tell you how many people have reached out and said, hey, guess what? I'm going to stop the withholdings on my Social Security, Bryan, because it's not taxed anymore. I'm like, wait a minute.
Wait a minute. There's a lot of confusion out there because Social Security was supposed to not be taxed. And once the big, beautiful bill came out, clearly nothing changed. The taxation of Social Security, none of that changed. There was this senior deduction that, they got that $6,000 deduction, as you said, subject to earnings qualifications, right? But they conflated the two. And they said, oh, well, because you may get this deduction over here, you may not have to pay tax on your social. One had nothing to do with the other. But it's politics, but it has led to a lot of confusion. And you're right. Some people are going to be surprised when they do their taxes that they, in fact, are still paying taxes on Social Security. Or worse, they stopped their withholdings and now they owe money.
Exactly. Yeah, and I just wanted to get that misconception out, and the people that listen to this podcast and are watching it are going to be like, okay, that was good, because there's a lot of misinformation out there. But let's talk about like a married couple. When you look at a married couple, you don't want to just look at one strategy, right? It's often those two lives. And we need to think about maybe those couples differently, especially if there's an age gap or there's a difference in earnings. So how would you approach someone that maybe has an age gap or a difference in earnings history?
Yeah, absolutely. The strategies for married couples, or really couples in general, and the way I define a couple, it could be a widower, could be a divorced person, right? Because they may be eligible for benefits off a former spouse. So couples are not just married couples, but the dynamics completely change. Because now you have to really look at, are there any spousal benefits? How does survivor benefits play into it? What are their individual incomes, right? Because maybe one has a high income and can't file early, but the other has a lower income and can. Does it make sense for the higher earner? There's a propensity for higher earning people who continue to work to delay as long as possible because they're like, I don't need Social Security. Why would I wait? Meanwhile, their spouse could be collecting a benefit equal to 50% of their benefit had they filed. And so their check triggers two checks. So you can't look at it individually. And so, I tell a lot of couples, it's usually the man that's the problem in my planning. He's like, well, if I take it early, I get a lower amount for more years. If I take it later, I get a higher amount for fewer years. It probably works out, break even at 81. I said, look, your benefit can live on 10 years after you're dead, right? As a survivor benefit. So you can't just look at your benefit individually. They're not two single people that you analyze separately. You always look at it together. But it does create some unique planning opportunities because where a single person with a low benefit, you might want to delay. If they're married, you might want them to take it early and get as many checks as you can because eventually they're going to get an amount equal to half of their spouse's benefit. So the dynamics are completely different for a married couple.
Yeah. As a man myself, Ash, I can say, yeah, we're stubborn too. So I'll agree with that. There's no doubt about it. But I loved how you redefined the definition of couples when it comes to Social Security, because you said two other classes of individuals that you didn't think you would consider a couple. You talked about the widow benefits, right?
Mhm.
And then you also talked about the divorcees who were once couples with someone, but maybe they didn't get remarried or something like that. And there's some nuances of widow benefits, and then there's nuances of divorcees. And how would, if I was a widow or divorcee, how does that play into the picture? What should I be looking at?
Yeah. So let's just talk about a widow. Okay. So if you're a surviving spouse and you get to uh, full retirement age, let's just take income off the table, and you get to full retirement age, you could collect 100% of your former spouse's benefit while you defer your own. And if your own benefit grew to amount higher than the survivor benefit, you could switch. You could delay to 70 and then switch, for example. If it's a ex-spouse and your former spouse's benefit is more than double yours, right? Or if yours is less than half of theirs, you can collect a benefit as an ex-spousal benefit off of them, even if they remarry. But it gets even more complicated. And I'll show a real example of this. I had a managing partner of a law firm. She said to me, I'm still working. I'm doing well. I'm about to turn full retirement age, but I don't need the money. I'm just going to delay it as a single person and wait to 70, max it out. Then I'll take it. And I said, well, let me ask you a few more questions. Were you married before? She said, yeah. I said, did your marriage last more than 10 years? Yes. Is he alive? She goes, no, actually, he passed away 5 years ago. I said, that's great news. She goes, I know. No, I mean, that's great news for Social Security.
For Social
Because
Security.
I said, you're allowed, now that you're full retirement age, you're allowed to collect 100% of your former spouse's benefit amount while you defer your own to 70. She goes, no, I can't do that because my benefit's more than half of theirs. I said, yeah, that's the rule for your ex-spousal benefit, which you don't qualify for. But now that he passed, you do qualify. So she would have missed $150,000 in ex-spousal survivor benefits had she waited to 70 to max out her own. So now is Social Security going to send her a letter and say, hey, by the way, you can now collect off your ex? No, that's the thing. You're not getting any information from Social Security on this. So she wouldn't even known she missed it if she waited to 70 and filed for her own. So you definitely have to look at the history of that person, right there. How long were they married if they were married before? Is their former spouse? Maybe they're married twice before, or either of them alive. There's some crazy scenarios that come up. But yeah, you definitely have to look at, just because you're an unmarried person, that doesn't mean you're not eligible for benefits off another person.
Yeah, and look at that value you created, right? You can quantify that value. You said it, 150,000 we would have left on the table, and that would have been forever left on the table if they didn't sit down with you and talk about some of these in-depth solutions that you have to offer. And it's asking those questions, right? Hey, was I previously married? How long was I married? Am I widowed? All that kind of stuff matters when it comes to Social Security. It was back to what you referred to as couples when it's considered for Social Security. But when we run across high net worth individuals, one of the things and the sentiments we kind of receive from it is like, hey, I'm worth 10 million, 20, $30 million, which is great. They've done a good job as savings, but they don't look at Social Security as like a big asset for them, right? But share with me, why is it so important for even them to look at Social Security and maximize the benefits?
Yeah, absolutely. And you're right. For higher net worth people, relative to their other assets or income, they think Social Security is insignificant. But honestly, I don't care how rich you are. Social Security could be worth at least $2 million guaranteed tax free. And I'll give this by an example. I had a client once, very wealthy guy, worth $80 million. And he and his wife were 66. They could have filed for Social Security. He goes, well, I'm not going to file because A, it's not a lot of money, and B, I'm going to pay taxes on it. My accountant, my attorney, my smart friends tell me, delay it, max it out, wait to 70, then take it. And I said, look, I want you to do the exact opposite. Take it as soon as you can. He said, well, why would I do that? I said, well, look, you're worth $80 million. The exemption now is for a couple, $30 million for federal estate tax. I said, you're $50 million over the federal estate tax. That's a 40% tax on that. So you're going to owe $20 million. So I said, here's what I want you to do. Take your Social Security now. Let's say you get $60,000 a year after tax, you net 40. Take the 40, gift it into an irrevocable insurance trust. It'll fund like a $2 million life insurance policy. Now, what have we done? We've swapped a potential income stream from Social Security and created a guaranteed income and estate tax-free asset. So I said, I think 10 minutes of your time calling Social Security, although it might be an hour and 10 minutes, is worth 2 million tax-free guaranteed. So for that person, Social Security is not relevant income-wise, but hey, it's a $2 million tax-free asset for estate tax planning. So even for a high net worth person who walks away from 2 million guaranteed estate tax free, of course, in my example, at least one of them had to be insurable, but the probability is they are, and you can convert this asset, this potential income stream, into a tax free asset.
Yeah. I mean, what a beautiful plan. What a beautiful idea that you've thought through of like, hey, don't look at Social Security as just I'm trying to delay the taxes. I'll maximize that 70. Look at what you can do in your overall estate plan or within your financial plan. I want to go off an example we kind of tiptoed into before. Is Ash, pretend I'm coming into the office and I'm 62 years of age. I'm not working. And I say, Ash, you know what? No matter what, I'm pulling my Social Security right now. How do you talk someone off that ledge? What is some of the good key points that you can just say to someone that has that, that direct mindset that's not willing to change?
Yeah. So I don't know how stubborn this person is that you're talking about. But the thing is, you know what? I say, look, it took you 35 years to earn this benefit. All right. We don't want to wing it. We want to make a smart decision because once you file, you're basically locked in. You have a couple of minor exit strategies. You're basically locked in. I don't want to run into you 3 years from now and say, you know what? I probably shouldn't have done that. Maybe I should have given it more thought. So let's really do a deeper dive on this. Let's see, what your overall situation is. Because as I said before, the risk in retirement is not dying young and not getting your money. It's living too long and outliving your money. And if that 62-year-old was a woman, I would say, you know what? This is an income you can't outlive. And later in life, the probability is you may have a long-term care event, and having a guaranteed income stream later in life may be very valuable to it. And if you lock it in at a lower amount at 62, you're going to come up short later when you really need the money. The other thing is the cost of living increase is applied to your benefit amount. If you apply to a lower benefit, you're getting a smaller dollar amount increase for cost of living than if you waited and had a higher benefit amount. So you have to look at the cost of living benefit in your Social Security. You have to say, what other assets do you have, right? Because you have choices. Assuming you have more than just your Social Security, you got to be smart about, well, does it really make sense to draw on this versus some of my other assets, right? So you have to really have the conversation about how it fits into their overall plan and not just look at Social Security in a silo, as you said, because that person walking in is looking at Social Security separately as one item, and they may have all kinds of emotional needs about why to take it. The government's, they're going to run out of money, or there might be other panic. You want to ask questions. Why do you feel that 62 is the right age for you? Tell me more about that and see where they're coming from. But then you got to take that and then talk about all these other ways Social Security could fit into their overall plan. And I think just having a broader conversation a lot of them will then pause and say, well, wait a minute, you know what? Maybe I should give this a little more thought.
Yeah. You brought up a point of cost of living adjustments, and I want to talk to what you hear a lot of time, which is like, break even age. You'll have people come in, I'll call them the engineers of the world, right, Ash? And they have an Excel spreadsheet, and they go, well, if I pulled at 63 and a half versus 68 years of age, my break even is about 11, 12 years from now. And what I always say to them is, did you consider the cost of living adjustments into that? And they always go, oh, I didn't think of that, right? And
Right.
then right then and there, their analysis is off. But have you ever run into those scenarios before? And how do you talk people through that?
Yeah. In fact, it's quite common that they don't really appreciate the impact of a cost of living increase. Now, the 20-year average is about 2.5%, which doesn't sound like much, but it really makes a big difference, over a retirement period, that kind of cost of living, because it's compounded. Once your check goes up, it never goes down, right? It's always an increase on an increase. And some of those years have been double digits, by the way, cost of living increases. Only like 3 years ago, it was 8.9%. So it can be significant.
Right.
But But again, it's all about, optimizing it. When I talk to people about the Social Security, they said, is it better to file early or file late? And I said, it's not that simple. I look at not maximizing Social Security, but optimizing Social Security. The way I see it is this: if I have a typical couple and they give me their data and I put it in my software and it runs like 500 scenarios, the first one I'm going to look at is, well, which one pays the most amount of combined lifetime benefits? Now, of my 2,000 clients, I've never had a single client choose a strategy that pays them the most money. And you're going to say, wait a minute, isn't that why they hired you? I said, no, they hired me to find them the optimal strategy, the best strategy. So if I had, let's say, waiting to 70 for both of them created the maximum benefit, but another scenario where if they both took it at, say, 68, they got 90,000 less in 25 years. Well, who cares? The net present value, that's the same, right? So now I've got two income streams with the same value in today's dollars. So which one's better? The one that pays you more upfront is better because you're more likely to get those first 5 or 10 years of checks than the last 5 years, 10 years of checks. So you have to kind of risk affect it too and look at that net present value. So the break-even point is just like one of a dozen factors in determining what your optimal filing strategy is, right? Because no one knows how long they're going to live. Maybe they live to 90 and maybe Social Security changes. We don't know like what's going to happen, but it's more than just that break-even point. And again, if it's a couple and that man, right, we're back to the man who said, well, my break-even's 78 or 81. I'm going, yeah, but you know what? Your check lived on 10 more years, right? As a survivor check for your spouse. So you can't just look at just the break-even point. You have to look at time value of money. You've got to look at maximizing upfront dollars without giving up too much down the road. You got to see, well, maybe taking it early allows you to fund life insurance or long-term care early. Delaying, maybe it gets too expensive to delay and then, finance life insurance. You can't look at it in a vacuum. I know we kind of keep circling back to this point, but it's a bigger conversation than just the Social Security value on your statement. It's how does it fit into your plan?
No, you nailed it, saying like, hey, there's multiple metrics that you need to be considering when you're pulling Social Security. It's just not, hey, my break even or this thing. I mean, granted, your health and life expectancy plays into that too. I know we didn't elaborate on that, but let's have a quick conversation on it. Is if someone comes in and is maybe sick or has some sort of chronic condition or has parents that didn't live, obviously that affects some of it, right?
Yep. Yeah, but some of it's counterintuitive. So let's say I had this case, a client, he was a doctor, but he found out he had terminal cancer and he was 66. And his wife was mostly a stay-at-home mom, had a small Social Security benefit of her own. So he's like, well, I want to file for my Social Security right away so I can get as many checks as I can. I said, no, we actually want to do the opposite. We want to delay your check as long as possible. Because if we delay to 70, for example, and you make it to 70, not only we get to your maximum check amount, but that's going to be your wife's survivor check for 20 years, right? He's trying to get as many checks as he can. Meanwhile, he's not thinking again as a couple, no, we actually want to get that higher survivor benefit for your spouse. So you would think, well, life expectancy, the shorter it is, the sooner you should take it. Not necessarily. Once again, we got to think as a couple.
Yeah, no, I love that. So for our listeners and viewers, maybe within a few years of retirement or maybe some already on Social Security benefits, but there may be some options out there, what action steps would you recommend to make sure their Social Security strategy is working for them? And what conversations and what questions can they be asking?
Yeah. Well, ideally, if people come to me for Social Security planning, I'd like to see them before they're 62, right? Before their first eligible date, whether they can file or not, because they may be working and they won't be able to collect anyway. But I want to know what all those options are going into it, because one thing we know about planning is the plan always changes down the road, right? So when I meet with them, we're making certain assumptions. Well, I'm going to work to this age. My income's going to be this amount. And then guess what? Life happens. Maybe they have a health event. Maybe they get laid off. Maybe their income changed because their business is struggling. There's a lot of things that can change in their planning. So the earlier we have to plan, we can kind of lay out what we would say, here's your optimal strategy as we speak today. As we get closer to those ages, 62 or when they retire, we want to revisit those plans. So we always want to know, has there been a change in health status, right? Did you change jobs? They said, well, I'm going to, work to 68 and retire. And guess what? They hate their job and they just quit, or maybe their job left them, right?
That actually happens? Wow.
Yeah. Can you imagine? I think it's called AI. But anyway.
Yeah.
So again, you want to put in front of them all their options, and then you want to monitor and manage that planning as you go along, because circumstances do change. I even had clients who, they did a plan from 4 years ago, and now we're like, well, here we are today. Here's our circumstance today. Did anything change? Did the rules change? I've had people call me and say, we're thinking of getting divorced now. Should we wait? Should we get divorced now? Like, how does that affect our benefits? So, life happens. So yeah, you plan it out, but then you want to monitor and manage that plan.
Now, Ash, if there was one last message about Social Security that you wanted to share with the world, what would that be?
Yeah, don't overlook it, right? Don't look at your statement and think, oh, that's not much of a benefit amount or whatever. You need to fully understand how valuable Social Security is. It may even be your largest retirement asset. So it deserves all the respect of a full analysis, doing a deep dive on it, and integrating it into your overall plan. Don't just plug and chug the number into your projected cash flows in retirement. It deserves its own analysis.
Well, that's beautiful. Ash, I got to say, that weekend you took to study Social Security has paid off for yourself, us, and the listeners and viewers. But we are very blessed to have you on. We appreciate your time. And I'm sure when they change the Social Security law again sometime in the future, which they will, we'll have you back on.
I appreciate it. Thanks so much. My pleasure. Great to see you.
Take care, Ash.
Take care. Thank you.
Thank you for listening to the Holistic Wealth and Health Podcast. We hope we inspired you to make changes so you can live your best life. If you want to find out more about what we do, or if you want to have a holistic wealth and health financial plan, please call 456-833-7000. Please subscribe to the podcast and share it widely with your friends and family. Financial planning and advisory services are offered through Prosperity Capital Advisors, PCA, an SEC-registered investment advisor with its principal place of business in the state of Ohio. J.L. Smith Holistic Wealth Management and PCA are separate, non-affiliated entities. PCA does not provide tax or legal advice. Insurance and tax services offered through J.L. Smith Holistic Wealth Management are not affiliated with PCA. Information received from this podcast should not be viewed as individual investment advice. Product discussions and illustrations are hypothetical in nature and will vary based on many factors, including, but not limited to, age, health, product, insurance carrier, and product design. You should consult the insurance carrier website and policy for detailed information. For information pertaining to the registration status of PCA, please contact the firm or refer to the investment advisor public disclosure website, www.advisorinfo.sec.gov. For additional information about PCA, including fees and services, send for our disclosure statement as set forth on Form ADV from PCA using the contact information herein. Please read the disclosure statement carefully before you invest or send money.